Markets are still trying to make sense of the capture of Venezuela's Nicolas Maduro by U.S. forces. Let's get some perspective on where stocks and bonds might be headed here. We're joined by Brent Joyce, Chief Investment Officer and Chief Investment Strategist at BMO Private Investment Counsel and BMO Private Wealth. Always great to see you, Brent. Thanks very much indeed for joining us. Off the top, of course, we just don't know. The Americans have been incredibly vague, it seems, on where they actually want to see Venezuela headed in terms of its leadership.
Yeah, these geopolitical events are something that, unfortunately, we've becoming to have to get used to as investors. You know, the market reaction was largely to pass through it and focus on what markets truly care about, and that's global economic growth. And there were some nice results over the past number of days through the purchasing manager indices that showed an uptick in the manufacturing space, a little bit weak on the one survey in the US on the ISM. And so the capital markets are taking a pass, I would say, really on the sideshow that is Venezuela and Trump.
You say that it was surprising how resilient economies and stocks were last year when you think about threats such as tariffs, but you see some big T's towards the end of the year. Turnaround, terrific, and all-time highs. The market sure rejoiced towards the end of 2025.
Absolutely. We characterized last year with two words, resilience and feedback. And the resilience was certainly the way that consumers continued to power through globally, despite the fog and certainly the disruption and the rewiring of global trade, but also businesses. A lot of it, yes, is the artificial intelligence capital expenditure story that has driven the market last year. But we're anticipating and looking forward to a broadening out for the global economy. And that's something like, you'd see yesterday with oil prices moving higher. That is a sign that we're expecting, an uptick in global growth.
So the projection for the global economy growth of more than 3.2% for this year?
Yeah, anything above 3 has been a decent number over the past decade. And so it's always about expectations versus surprises. And we know the U.S. economy has been running very hot and continued to run above expectations last year. But the Canadian economy came out surprisingly strong with the back half of the year last year, improvement in the Eurozone. Also coupled with, I think, what is a change in attitude forced in large part by some of the geopolitics with this fiscal spending push that we're going to be seeing in Europe and Canada, nation building projects, defense spending, and the Chinese are continuing to stimulate their economy as it has been moribund for a number of years, as we know.
What are your thoughts on tech stocks this year, Brent?
Yeah, I think we're going to have to move from just the AI innovator hyperscalers and start to think about the adoption and the spread of this technology across the economy. When you think about general purpose inventions over the centuries, the big, huge rewards obviously go to those who innovate and discover these inventions. And we've seen a lot of that. That would be the NVIDIA example. But the productivity gains have to come with adoption of the new technology across a whole variety of bread and butter, normal, everyday Main Street sectors for the economy. And I think that's going to be the story for technology this year. And that's going to involve more of not just the technology space itself, but a broadening out where we can see productivity gains in other areas like financials and industrials, you name it, really, healthcare.
I wonder, there seems to be evidence that companies in many cases have been slow to realize productivity gains from AI investments. Now, I know it's super early days. We're just at the dawn of this thing. But is there a risk that investors will decide, hey, this is going to take years to play out maybe, and they'll deflate some of these AI-related stocks?
Yeah, I think there is a risk that we've straight line extrapolated some of the opportunity in some of the businesses. That's, again, not unusual for new technologies, new inventions. You do get some sort of over-enthusiasm. That is what drives the reward and the attraction for the technology to be adopted. The interesting thing about productivity, it's a nebulous concept. It's very hard to see it and to measure it in real time. It is often only observed in hindsight. We've seen strong productivity gains in the U.S. economy for a number of years, and that isn't just the AI story. And so I do think there are productivity gains happening in the economy beyond just artificial intelligence, whether that's automation or other adoption of technology that's a little bit more mainstream and has been here for a while.
You're so right. We bandy, I love that word, bandy. We bandy around terms like productivity. And what exactly does that mean? Yeah, I suppose in some ways it's extra work you can get out of each employee. Leave us with a final thought, Brent. I may have asked you this before, and I'm sorry if I have, but do you think there's some risk, some iceberg out there in the mists in 2026 that we should watch out for?
Listen, I think we always have to be on guard for black swan events. If we knew what they were, we wouldn't call them black swan events, right? But when we look at the various fundamentals across the economy, the consumer debt levels, what businesses are up to, the exciting things that are happening in technology, opportunities for a rewiring of how we do business. One of the things I think that really was proven last year is the business of the world is doing business, and it can adapt and move forward businesses and households once it has some understanding of the rules of the road. And I think there'll be less fog if there's an iceberg, hiding out there. We might see it sooner because there'll be less fog from the geopolitics and the trade rewiring. What should investors do, I think, is to make sure that they keep their risk tolerance in check. One of the things that can happen after 3 years of very strong markets is we all think we're investing geniuses. And we see our risk tolerance creep into an area where we may be uncomfortable if we really truly ask ourselves, what would happen? What would I do? What would my reaction be if the market went down 10 or 15 or 20%? And if the answer is that you're going to panic, then you should probably do some rebalancing in your portfolio. It's referred to as bull market genius. Everybody's an investing genius when markets are going up. And so check your risk tolerance, take some profits, be disciplined. And I think that's the best way to navigate if there are icebergs hiding out there in the fog.
Brent, thank you very much indeed.
Always a pleasure. Thanks, Andy.
Brent Joyce, Chief Investment Strategist at BMO Private Investment Counsel and BMO Private Wealth.